Hey traders, it's been a few weeks since I did a video. I've been working a lot and stuff. Basically this line right here, this little blue line here, that's our 100-year trend line. It's formed off of the Great Depression back in the 30s. And then it had second touch point was the dot-com bubble. It took 5 months to actually form the top for the trend line on a monthly time frame. And wouldn't you know, right on cue on the fifth month, we rejected that away from that trend line, just almost perfectly that we rejected from that area. So I have been talking about that, talking about it. I thought it was a blow off top. It took $2 trillion of deficit spending in the U.S. economy to get us into that trend line, and it actually is playing out exactly like I thought it would. Um, Now we have a new administration that is upending everything, and so we're in for a quite significant reset in the markets. Trump's trying to, in theory, uh, get away from this deficit spending. And think about it, guys. We're adding $2 trillion. It took $2 trillion of spending to get us up into that trend line. So a big pullback in this market is quite warranted going forward here. So be very mindful of that going forward. And so the pain could very well not be over, but in the short term, we may be into a buy the dip area. So I do think we're still going down to 4,800. Ideally, that's what I'd be looking for, 4,800 on ES or the SPX. I don't know which, but that's my primary target, and we're not there yet. So we'll see how it plays out this week. Volatility spiked VIX on the Asian Open. We had saw the VIX up to 60 in the overnight, and it's paring back a little bit this morning. So, but VIX 60, wow, you guys, wow, you know. So just be very mindful of that in your trading. Okay. Some thoughts that I've got going on here. The big risk that we have going forward here, as far as this week, in my opinion. So we do have some CPI, PPI, inflation related data. Um, the energy market suggesting to us that we might be heading into a depression, given the reaction to the energy market, a global recession, depression, recession, whatever, giving how the energy has come back really, really hard on the energy side, suggesting depression, global depression. Uh, but in my opinion, the big risk that we have going forward here. One second here, let me get this thing off here real quick. Uh, Going forward here, guys. Like I said, end of the week, we got CPI, PPI, really big market movers, and we're kicking off earnings season. So at the end of the week here on Friday, we do have bank earnings starting to kick off. A lot of times we'll see a big sell off in the markets ahead of the actual news coming out, and then you get a little relief rally as the news comes out. So we still potentially have 4 full days of sell side action, getting us down into that 4,800 before the banks actually come out. So be very mindful of that scenario. And we are expecting a 300-point move is already baked into the volatility on the S&Ps. So very high, you know, uh, uh, expectations, a 300-point move in a potential here in the S&P. So be very mindful of that going forward here. Okay. So, that's not even an outside move. Go 300 points up or down for the week. That's just normal trading already priced in. So be very mindful of that in our trading. The odds of exceeding it are probably slim, but you never know. So anything can happen. But as I was getting into, so we do have treasury auctions this week, and this is what my primary theme of this video is going to be about. So basically, for decades, what's been going on here? The international community has been willing to take flat to negative returns on U.S. Treasuries as a placeholder for the right to trade into the U.S. market and have net positive exports to the U.S. economy. Okay, and so what we're seeing with the Trump policy, the tariffs and the tariff unwind. This is uh, really disrupting this whole dynamic that we've got going on with the global community. Okay. And so we have to be very concerned, which nobody's even talking about it, that we could be facing a buyer strike of U.S. Treasuries in the upcoming auctions. And in my opinion, these here are probably the most important things to watch this week to see the reaction, see if global central banks actually come in and support U.S. Treasuries. Because we know we are the biggest debtor on the planet. Okay. And we have gotten so accustomed to these really low yields. Okay. Uh, and there is this, nobody's even talking about the potential that we could start seeing really bad treasury auctions. And they're talking about last week, they're talking about everybody's going into these treasuries and the treasuries are 1 year highs. You know, yes, right here, the treasuries are 1 year high, yields are getting crushed and everything. But the situation we have here, what happens if you have a buyer strike? Okay. Nobody's even pricing in the potential for a treasury buyer's strike. And in my opinion, when you piss off every country in the world because you're wanting to rework the treasury or the tariff uh, uh, dynamics with these countries, all they have to do is not show up to the auction and say, well, I've already got a bunch of U.S. treasuries. I just won't buy any for a while. And now that we're at a 1 year high on the treasuries, guys, just keep in mind here, these countries that bought our debt 18, 20 years ago, in most respect, they are flat to negative returns on those investments. And we're talking about trillions of debt that have been bought by the international community that are sitting, they're not making any money. So if they're not going to make their money on tariffs, the number one way to start offset their losses on the tariffs is just not to show up for the auctions. Drive those yields back up. I have been saying for a long, long time, 8, 9, 10% yields on 10, 20, 30-year more treasuries. It makes a lot of sense. Okay. And what's happened is we've got this idea that it's American exceptionalism. We have American exceptionalism because the entire global uh, economy has been artificially uh, suppressing long-term yields in the U.S. This is a major, major risk that they're just going to quit doing that. Because, hey, if we're not going to get preferred status of trading into your economy at a better uh, ratio than what we buy from you, well, we can just make up the difference by not buying your treasuries anymore and wait for the yields to come up, and we'll start buying them again when the yields get up to an attractive rate again. Okay. And this, in my opinion, is something nobody's talking about. And this is happening this week. We got these auctions. So we have to be very mindful that these are probably going to be bad auctions. And I really want to point that out. We are really risking the chance of some bad auctions hitting the market, and nobody's even thinking about it. So I don't know what if it's going to hit yet. Maybe they come in here and they prove me wrong. But this to me is the big risk that nobody's talking about. So be very mindful of this. And remember, as far as size of the market, the bond market is much, much greater than the size of the stock market. Okay. So the bond markets rule the entire global markets. Okay. It is the mother of all the backdrop of the markets. So, and nobody, and they're just not talking about it. France alluded to what that you can tell, you can read between the lines some things the French prime minister was talking about how they were going to approach the situation, and they were directly making comments alluded to their purchase of U.S. Treasuries, but they did it in a very sublime way to where the sell algos, really didn't catch on earlier last week to what they were actually planning. So you have to be really careful, guys. These algos, they're listening to these news forecasts, and they're keying on key words that are coming out of these politicians. So they're being coached what words not to say to trigger to trigger the programs. Okay, so that's the way our world works. Okay, and so be very mindful here. I'm very concerned about what's going to happen here. As yeah, I see a lot of deal making happening on the tariff side, but on the back side, I see a lot of these countries saying, "Well, if I'm going to give you these big deals on the tariffs, then I'm not gonna buy your treasuries anymore, and I'm gonna wait until I get paid on the back end with the treasuries." And and guess what that's going to do to the housing? All of a sudden mortgage prices start to skyrocket. Mortgage interest rates start skyrocketing, and there's a lot of dynamics here, guys, with these bonds that can really blow up this economy quick. So just be very mindful of that going forward here. Okay. So, guys, I'm just going to go real quick here and some themes that I'm looking at here. Ultimately, I'm looking for 4,800 here on the ESs or S&Ps, depending on how you want to look at it. Basically, the 50-day moving average or the 50-month moving average. A hard test of that, and the dip buyers are probably going to show up at that point. So we're getting a little relief rally this morning. Maybe it holds, maybe it doesn't. I think it's probably more likely that we're going to be retesting overnight lows. Um, so we did have the low print of the session was on the ESs was 48.32. So we got down to 48.32 in the overnight so far here, 48.32. So basically, we were looking for 4,800 on potentially on the SPX. But we have gotten awful close. Uh, we'll see what happens here, but maybe that's all we get. But our trend line is the 50 SMA monthly. It's down here. Where is that? 46.58. 46.58 is actually where that is. And you see how we've done this before. We've come down, we bounce, and then have one little last push down. And I'm worried that the auctions are actually going to do this. We're going to come down, get pushed down by the auctions this week. So be quite mindful of that, those bond auctions. Okay. As far as NQs go, see we're still considerably away from that as well. Look at this. See how when we come down, we have a really very nice support acted before. We haven't gotten down to that level yet. So I'm still looking for more downside. So be very mindful of that. A lot of traders are going to be looking for the same thing. The Russell, it has broken. It has just completely, absolutely got obliterated. We do have see these prior highs right here. So we have looked below those prior highs. This here is probably right here. This here is your demand zone right here. So we've come off the demand zone early on this morning, potentially come off the demand zone. And we did have limit down in some of the Asian markets on the open last night. So, to think that, they're just completely going to throw in a towel, you got to be very mindful of that. If you look at your VX futures this morning, wow, look at those VX futures. We got up there, but we've been up there. We've been up these levels before. So be very mindful of that. We have been up to these levels before. Um, Bottom line is, you see right here, you see that wick right there? This is the supply area right here. So here is your supply on the VX futures. And as you can tell, we have not gotten up to supply yet. I mean, so be very mindful of that. We have had higher supply. Back in 2020, and so we have back in 2012 at 2012. Okay, and then we had so it doesn't mean we can be doing something like this, considering we haven't had the earnings season actually report yet. We could be doing something like this because honestly, as far as current earnings numbers go, I don't think they're going to be that bad. You know, as far as for Q2, I don't think they're going to be horrible. And a lot of companies already have bought a lot of the inventory, and they've been warehousing it. So it could even help out on Q3. All the inventory that has been shelved already here. So be very mindful of that. Some of the numbers are probably not going to be quite as bad yet, but we have to look forward thinking. Obviously, the longer these things go on, of course, that's going to be a problem. But I do think the biggest problem we've got to worry about is the bond market. If we have, a buyer's strike, guys, so uh, we have to be very mindful of that. This could get bad really quick, and I don't want to understate just how bad the bond markets. How This is why no other politician has ever attacked the tariff side of the economy. It's because we've been printed. We've backed ourselves into a corner on the amount of debt that the global community has to service, just to keep the ball rolling. Okay. And now, the Trump policy here threatens to unwind that host dynamic. So be very mindful of that going forward here. If you like my video, please uh, below like it on my YouTube channel here, and leave some comments below if you're seeing some stuff that I'm not seeing. And I really appreciate everybody watching my videos. It's been a few weeks here, so I may not get a lot of viewers, but please spread my video around, retweet me on X if you get a chance, and I appreciate any feedback you give me. Thanks a lot.